Wow, you guys have been sending in some really fascinating stuff this week. I mean, a lot of it, a lot to unpack.
Yeah, it seems like every time you turn around, there's another headline about trade and tariffs.
Yeah, tariffs.
Yeah.
And, it can be hard to sort of cut through all that noise, right? I mean, figure out what it all really means.
Yeah.
Like, not just for, the big players, but for you, for me.
Exactly. I mean, we're talking about something that has the potential to, well, it's already kind of shaken things up. On the global financial stage, I mean, you've sent us all kinds of sources and articles really digging into these U.S. tariff changes, this whole new structure they're talking about.
Yeah, back in April 2025.
Right, 2025. Feels like a while ago now.
Yeah, well, time flies, right? So we need to kind of break this down, right? Get a grip on the specifics of what's going on, and then, zoom out and see that bigger picture.
Exactly. And that's really the point of this deep dive, isn't it?
It is.
To help you understand just how significant all this is.
Okay, so where do we start? Well, I guess the big attention grabber
Yeah.
was that new baseline tariff, right?
Yeah, the
10%
exemption. Yeah.
on, well, almost everything. Pretty much everything the U.S. imports. And that kicked in, what, April 5th?
That's right. April 5th, 2025. That was sort of the first wave.
But then it gets a bit more complicated, right? I mean,
Yeah.
it's not just a flat 10% across the board. There's these, what are they calling them? Reciprocal tariffs.
Yeah, the reciprocal tariffs, those are the ones aimed at countries that have, a fairly large trade surplus with the U.S.
Right.
So those kicked in a little bit later, April 9th. And we're talking about a hefty 34% on goods coming from China,
Yeah.
and then 20% on anything coming from the European Union. And remember, these are on top of any, pre-existing tariffs. Like,
Yeah.
we've already got that 25% on cars, steel, aluminum.
Right. So it's like they're piling on.
Exactly, adding layers, which, has a big impact on the overall cost of doing business, of trading.
Right. Okay, so deep breath. Where are we going with all this?
Well, our goal here in this deep dive is to kind of wade through all this, right? I mean, all the sources you've sent us are amazing. We're talking news articles, expert analysis, all sorts of perspectives.
Yeah, and we want to pull out those crucial insights, the stuff that really helps us understand what's going on.
Right, like what are the economic fallout? And I know we saw some pretty immediate reactions. I mean, as soon as this was announced, the global markets just didn't seem very happy.
No, not at all.
So we want to get into that. And then there's the geopolitical side of things, right? Like, what's the strategy here? Is there a grand plan?
Right. What are the underlying motivations, the bigger game?
Exactly. And, it's always helpful to put things in context, right? I mean, how does this all fit into the kind of the historical sweep of global trade?
And we want to do all of this.
Right.
Without, overwhelming you with too much information.
Right. Give you that clear perspective so you can really grasp what's happening. Absolutely.
Okay, so global markets. I guess the reaction was pretty swift, wasn't it? Like, as soon as these tariffs were out there, it was almost like the world hit the brakes.
Yeah, very quickly. And across the board. I mean, you pointed out some of those sharp declines, particularly in the Asian markets.
Yeah, like Tokyo's Nikkei, the Kospi and Seoul, Sydney's S&P, SX200, they all took a tumble.
Significant drops.
Yeah, and even before the U.S. markets opened, our own stock futures, for the S&P 500, the Dow, they were all pointing down.
Not a good sign.
No. And then, the U.S. dollar.
Yeah.
It weakened against, well, most of the other major currencies. I mean, it just seemed like instant unease, like everyone was holding their breath.
Yeah, a lot of uncertainty, definitely.
Yeah.
And what's really interesting is just how, just how fast and widespread that reaction was. And it really highlights, how interconnected the global economy has become.
Yeah, one big tangled web.
Exactly. I mean, any significant change in one part of that web ripples out, across the whole system.
Mm-hmm.
And what were the main concerns driving all of this? Well, you've got, that immediate worry about a global economic slowdown.
Right.
I mean, some people are even talking about a possible recession. And then you've got, the specter of inflation rearing its head again. And of course, investors.
Oh, yeah. They're always watching.
They're paying very close attention to how these tariffs, will affect corporate profits, both here and internationally.
Right, because at the end of the day, that's what they care about. Bottom line.
Makes sense.
And the experts, the economists, is they seem to be echoing those concerns, right?
Yeah.
I mean, I saw some pretty stark warnings in some of the stuff you sent.
Oh, yeah. I mean, you mentioned Fitch ratings, right?
Yeah, they were saying that, well, they think quite a few countries could actually end up facing recessionary pressures
Mm-hmm.
because of these tariffs.
Mm.
That's a big deal.
That is a significant statement.
Yeah.
I mean, when a major credit rating agency, like Fitch, starts talking about potential recessions, that gets people's attention.
It does. It does. And the Peterson Institute for International Economics, the PIIE,
BIIE, yeah.
they also had some pretty grim predictions, right?
Yeah, they were painting kind of a combination of negative outcomes. You know, they're talking about higher prices for consumers here in the U.S., damage to, well, both the U.S. economy and the broader global economy.
Right, because everything's connected.
Right. And a very strong likelihood that, you know, that those countries being targeted by these tariffs are going to retaliate. They're going to hit back.
So it's not just talk, right? I mean, a trade war, that's a real possibility.
Yeah, according to the PIIE, it's not just rhetoric, it's highly probable.
Okay, so let me try to get this straight. So tariffs basically mean that anything imported is going to cost more.
Right. Right. It's like adding a tax.
Right, a tax.
Yeah.
So naturally, those companies, they're going to pass that extra cost on, right?
Yeah.
To us.
Yeah.
To the people buying those goods.
Ah.
Which means higher prices for, well, pretty much everything.
Exactly.
And I was just at the store the other day, and wow, some of that stuff is getting pricey.
It's hitting everyone's wallets.
Yeah. And then, I mean, think about all the behind-the-scenes stuff, like all the global supply chains, all those intricate networks that bring us, well, everything.
Yeah, and that's a whole other layer of complexity. You can imagine those are going to get even more tangled and disrupted. With all these new tariffs, it's going to be a real mess for companies trying to, you know, source materials and get products made and shipped.
Right. Okay, so back to the big picture. I mean, putting a baseline tariff on practically everything, that's a pretty major shift.
It is.
I mean, in the past, we've seen more targeted actions, right, focusing on specific industries or countries. But this is like a blanket statement.
Yeah, very broad. A real statement of protectionism.
Protectionism. So if we're zooming out, trying to see the bigger picture, what are the goals here? Like, is this about, you know, bringing in more money for the U.S. government?
Revenue generation, that's certainly one possibility.
Or is it about trying to kind of revitalize domestic industries?
Protecting them from foreign competition, giving them a chance to grow and thrive.
Or is this something even more radical? Like,
Yeah.
are they trying to kind of completely reshape the whole global trade landscape?
That's a big question. And honestly, it's hard to say for sure. It could be a combination of all those things, right? But it definitely signals a major shift in thinking.
It does. So the Trump administration, they had their justifications, right?
Yep.
I mean, according to all the stuff you sent me, they talk a lot about reciprocity.
Right. The idea of trade relationships needing to be more balanced, more fair.
And they talked about addressing what they called unfair trade practices by other countries.
Right. They were pointing to trade deficits as evidence of that unfairness.
Right. So let me see if I understand this. They're basically saying that if the U.S. has a trade deficit with another country, meaning we import more from them than we export to them, that's proof that they're not playing fair.
That's essentially the argument. But, and here's where it gets interesting, a lot of economists, they kind of push back on that logic.
Oh, really?
Yeah. I mean, they'd say that trade deficits are a much more nuanced issue. You know, they often reflect a country's overall savings and investment patterns,
Ah.
as well as the level of consumer demand within that country. I mean, a trade deficit in itself, it's not necessarily evidence of protectionist policies by other countries.
Interesting. So there's this gap, right,
Mhm.
between what the administration is saying and what kind of the established economic understanding is.
Exactly. And that gap really makes you wonder about what the true motivations might be. What's really driving this policy?
It does. Okay, so let's zoom in a little bit. Let's talk about one of the major players facing these tariffs, the European Union.
Huge trading bloc, the EU.
I mean, they're massive. And they've got that 20% tariff now on their exports to the U.S.
Uh-huh.
That's got to have a ripple effect.
Oh, absolutely. It's going to be significant. I mean, some of your sources, they were suggesting that the EU's GDP growth could be reduced by, you know, somewhere between 0.33% and 1% in the short to medium term.
So not a tiny impact?
No, not at all.
And certain industries within the EU, they're going to feel this more acutely, right?
Oh, yeah, definitely. Your sources, they were highlighting the automotive sector.
Cars.
Right, cars, machinery, equipment, chemicals, all areas where the EU has traditionally been a strong exporter.
Right, so they're going to be hit pretty hard.
Makes sense, right. They rely heavily on the U.S. market, and now their goods are going to be significantly more expensive here.
Yeah. And within the EU, which countries are we talking about? Like, who's most exposed?
Well, your sources pointed to Germany and Ireland.
Germany, Ireland.
Yeah, I mean, they simply export a huge volume of goods to the U.S., so any kind of tariff hike,
Oh,
it's going to be felt pretty keenly over there.
right. So what's the EU doing about it? And are
Mm.
they just kind of sitting back and taking it?
Not exactly. No, the sources indicate that they're planning some countermeasures, retaliation.
Oh,
Yeah, they're talking about imposing their own tariffs on U.S. goods. And some of them are, well, let's just say they're carefully chosen,
like what?
like American beef, poultry, bourbon, and motorcycles.
Ooh, motorcycles. That's gonna sting a bit.
Yeah, the idea is to hit back at politically sensitive sectors within the U.S., apply some pressure.
Right. Tit for tat.
Classic trade war tactic.
And it's not just about, the big industries and companies, right?
No, absolutely not.
I mean, everyday people, they're going to feel the effects too.
Definitely. There are real concerns about the impact on workers, particularly rural and blue-collar workers.
The EU.
Yeah, in the EU, the ones who are involved in producing those goods that, are now facing those higher tariffs in the US. I mean, there's a chance that, some of those jobs could be lost if demand drops too much.
And there was something about tourism, wasn't there?
Yeah, it's interesting. There's this idea that the overall negative sentiment, all this trade tension, could lead to a decline in international tourism to the U.S.
Really?
Yeah. And that would, of course, further impact, the trade balance.
Oh, so it really is all connected.
It is.
So that 20% tariff, it's a major headache for the EU, right? I mean, because their goods are suddenly so much more expensive in the U.S.
Absolutely. It's going to make it harder for them to compete, likely lead to lower demand.
Right. And their retaliation, well, that's meant to put pressure on the U.S.
Pushback.
But couldn't it make things worse? I mean, escalate into a full-blown trade war.
That is a very real risk. And if we connect this back to, recent history, we've seen this kind of back and forth play out before, haven't we?
We have. I mean, the Trump era, there were all those tariffs and counter tariffs.
Yeah, back and forth. And it rarely ends well. Usually everyone ends up worse off.
Okay, so let's shift gears. Let's talk about China. I mean, they're facing an even bigger tariff hike, right?
By 34%.
34%, yeah. And remember, that's on top of existing tariffs. So we're potentially talking about some Chinese goods facing a total tariff of around 60%. That's massive.
It's huge.
It is.
Yeah.
And it's not just the broad tariffs. The U.S. is also considering even more targeted ones.
Oh.
Yeah, aimed at industries that they see as, strategically important, like semiconductors, pharmaceuticals, critical minerals.
Right, those are all key areas.
Exactly. So it's not just about, broad economic pressure. It seems like there's a more targeted strategy at play here.
Trying to weaken China's position in those key industries.
Potentially.
Okay, so China's economy, I mean, they've relied so much on exports for their growth. So these tariffs, they got to have a huge impact.
Oh, yeah. The expectation is that, you're going to see a lot of companies looking to shift their supply chains away from China to avoid those higher costs.
And within China, there are serious concerns about potential job losses, particularly in the manufacturing sector.
Right, because if those companies move, those jobs go with them.
Exactly. And what can China do? I mean, their options are limited, but they will almost certainly retaliate, probably by raising their own tariffs on U.S. goods. And this is important. They're likely to expand export controls on those critical minerals.
Right, the ones that the U.S. needs.
Precisely. So it becomes a kind of strategic game of leverage and counter leverage.
Right.
And looking at the long term, it seems like China is already thinking about how to adapt to this new reality.
Okay, how so?
Well, the sources, they point to China continuing its push towards high-tech manufacturing, moving up the value chain, producing more sophisticated goods.
Right, so they're not just going to be the world's factory anymore.
Exactly. And they're actively looking to expand trade with other partners, like the EU, Mexico, Vietnam, diversify their export markets.
Right, so they're not so reliant on the U.S.
Exactly. Reduce their vulnerability. But even with all that, these tariffs they're going to worsen the relationship between the U.S. and China.
Oh, for sure. It's already pretty strained.
Yeah. And this could be a step towards a more fundamental decoupling of the two economies.
Decoupling.
Yeah, I mean, a real separation, less interdependence.
It sounds almost like going back in time. I mean, we've spent decades building these connections, these global supply chains.
It's true. Globalization has been the dominant trend for a long time.
Right, and now it feels like we're shifting away from that.
Potentially. And that's a big deal. It's a real shift in the global economic order.
So even though China's trying to diversify, the U.S. is still a massive market for them.
It is. And these tariffs, they're going to directly impact Chinese exporters. Could lead to decreased production, factory closures, all sorts of things.
Right. And it comes at a time when, China's already facing some internal challenges.
Exactly. It adds another layer of pressure to an economy that's already navigating a lot of complexities.
Okay, so we've talked about the EU, we've talked about China, but these tariffs, they have a much wider reach.
Right. Global reach.
I mean, even some of America's closest allies are getting hit.
That's right. Japan, for example, they're facing a 24% tariff. South Korea, 25%.
Wow. And what about Canada and Mexico? I mean, we've got that USMCA trade agreement.
The USMCA, yes, there are some exemptions in place, but, there's still a potential for spillover effects. And existing tariffs on certain goods, those remain a concern.
Right, so even with the agreement, it's not all smooth sailing.
It's complicated.
It is. And here's what really surprised me. Even countries where the U.S. has a trade surplus.
Meaning we export more to them than we import?
Right. Like the UK, Argentina, they're getting hit with that minimum 10% tariff.
It's true. And it goes even further. I mean, even tiny places like Lesotho, Saint-Pierre, and Miquelon, places with very little trade with the U.S., they're included.
Wow. So it's not just about, targeting countries that the U.S. has a deficit with.
No, it's much broader than that.
And when you see tariffs being applied to close allies like Japan, South Korea, it sends a message, right?
It does. It suggests that reducing trade deficits is a top priority, even if it means creating friction with long-standing partners.
Even if it kind of jeopardizes relationships that are important for, other reasons.
Yeah.
Diplomatic reasons, security reasons.
Exactly. It signals a real recalibration of priorities.
It does. Okay, so one of the biggest head-scratchers in all this is Russia. They're exempt from these tariffs.
Yeah, the Russia exemption, it's raised a lot of eyebrows.
It has. So the White House, their explanation is that because of all the existing sanctions.
Right, those sanctions that were put in place after the invasion of Ukraine.
Right, because of those sanctions, there's basically no meaningful trade between the U.S. and Russia anymore. So It's pointless to impose tariffs.
That's their argument. But some of the information you sent me, it suggests that might not be the whole story. Yeah, I mean, while trade between the U.S. and Russia has definitely decreased a lot, it hasn't completely disappeared. And the data indicates that the U.S. actually trades more with Russia than with some of the countries that are included in the tariff list, like Mauritius, Brunei.
Oh, okay. So It doesn't quite add up.
It raises some questions. And it's worth keeping in mind that the possibility of, further sanctions on Russia, that's always on the table.
Right. So if it's not just about existing sanctions, what are the other possible explanations for this exemption? I mean, there was talk of maybe trying to improve relations with Russia.
Right, a kind of thawing of relations.
Or maybe using the threat of tariffs as leverage in future negotiations.
A bargaining chip.
Right. And some people were even speculating about, secret discussions between Trump and Putin.
Behind-the-scenes deal-making.
Yeah. And the timing of it all is pretty interesting, right?
I think it's curious, yes.
Because the announcement of these tariffs, it coincided with a visit from a high-ranking Russian official, Kirill Dmitriev.
Yeah, he's a close advisor to Putin.
Right. So that definitely adds fuel to the fire, doesn't it?
It does make you wonder.
It does. And this whole Russia exemption, it's led to some pretty interesting theories.
Oh, yeah, definitely.
Like this idea of a reverse Kissinger strategy.
Ah, the reverse Kissinger.
Yeah. Can you explain that one?
Sure. So the idea here is that, during the Cold War, the U.S. kind of famously improved relations with China as a way to counter the Soviet Union. This was Henry Kissinger's strategy.
Right.
So the reverse Kissinger theory, it suggests that maybe the U.S. is now trying to do something similar, align with Russia.
To counter China.
Exactly, because China is, they're the rising power now. And President Trump himself, he's said that he wants to see Russia and China become less aligned.
Wow. So that would be a pretty major shift in global strategy.
It would, but there are some big obstacles to this theory.
Oh.
Yeah, I mean, first of all, the relationship between Russia and China, it's been getting stronger, not weaker.
Really?
Yeah, they have a lot of shared interests, and they both see the U.S. as, the main obstacle to their ambitions.
Right. So it's not like the Cold War.
Yeah.
where there was that huge ideological divide between China and the Soviet Union.
Exactly. And their economic ties are also growing stronger, especially since those Western sanctions hit Russia.
Right. So it's not just about, shared grievances. They need each other.
It's pragmatic, it's about real economic and geopolitical interests.
So this reverse Kissinger thing,
It's a fascinating idea.
it is. But it seems pretty unlikely.
Yeah, the historical analogy, it's probably a bit flawed.
Okay, so you were talking about some historical context earlier.
Mm.
You mentioned the British balance of power strategy.
Right, the British way.
How does that relate to what we're seeing now?
Well, for centuries, the British, they had this strategy of preventing any single power from dominating Europe.
Right. Keep everyone in check.
Exactly. And they did this by, using their naval power, forming alliances, sometimes intervening directly in conflicts. They were the classic offshore balancer.
Right. And some people are saying that these U.S. tariffs
Hmm.
are kind of a similar play.
Yeah, trying to curb China's rise,
Yeah.
preventing them from becoming too powerful economically.
But the U.S. approach, it seems a lot more, well, blunt, right?
It is less nuanced, less diplomatic. I mean, the British, they relied heavily on alliances and on, financial support to maintain that balance of power. But the U.S., they're acting largely unilaterally.
Right. Going it alone.
Pretty much. So both strategies, they share a concern about, managing rising competitors, but the methods, the style, the context, it's all quite different.
Right. Okay, now you were talking about tariffs being used for industrial development
Right, historically.
in both the U.S. and Britain.
It's an interesting parallel.
It is. So
Yeah.
tell me about that.
Well, in the early days of the U.S., Alexander Hamilton, he was a big advocate for using tariffs to protect American industries.
Yeah.
Help them grow, become more competitive.
Right. Shield them from foreign competition.
Exactly. And that idea was a key part of what was called the American system back in the 19th century. And during its period of, rapid industrialization, the U.S. did have pretty high tariffs.
Yeah.
And Britain, they also used tariffs in earlier periods, the Corn Laws, for example, to protect their agriculture. But once Britain became, the dominant industrial power, they shifted their policy. They became big advocates for free trade.
So once they were on top, free trade suddenly seemed like a good idea.
It's interesting, isn't it?
It is. So tariffs, they can be a tool, right,
Right.
to nurture domestic industries.
Potentially.
But it depends on the context, right?
Absolutely. The stage of a country's economic development,
Mhm.
the global economic conditions at the time, it all matters.
And the economic conditions back then, they were vastly different from today, right?
Oh, yeah. The world was a lot less interconnected. Globalization wasn't really a thing.
Right. So it raises the question, doesn't it, about what the long-term goals of this current U.S. policy are. I mean, are these tariffs a temporary measure, just to give American industries a boost?
That's one possibility.
And then maybe the idea is to kind of shift back to free trade once they're stronger.
From a position of dominance, it's an interesting question.
It is. Okay, so different economic perspectives. You mentioned Friedrich List earlier.
The direct list, yeah.
He was a big proponent of the national system.
Exactly. He argued that state intervention, things like protective tariffs, they're essential for countries that are trying to develop their industries, especially when they're facing competition from, more established foreign companies.
So it's about giving those domestic industries a chance to catch up.
Right. He made a distinction between what he called productive power.
Productive power.
Yeah, a nation's capacity to, to actually produce things, to create wealth, and exchange value, which is, just about trading goods.
Okay, so he's saying that producing things is more important than just trading them.
In the long run, yes. And he was critical of Adam Smith's more, cosmopolitan view of economics. He thought Smith's ideas were more applicable to, countries that were already economically advanced.
Like Britain.
Exactly. So for List, tariffs were a strategic tool, a temporary measure, part of a larger plan to eventually achieve national free trade.
So protect your industries first, and then open up.
That was his idea.
Okay, so on the other side of the spectrum, you've got the free market economists.
The free marketeers.
Right, Adam Smith, Hayek, Friedman. And they're generally against tariffs.
They are. Their argument is that free trade is ultimately better for everyone.
How so?
Well, they'd say it gives consumers access to cheaper goods, and it fosters competition.
Right, so companies have to kind of up their game to stay ahead.
Exactly. And tariffs, they just distort markets. They create inefficiencies.
Okay, so Milton Friedman, I read some of his stuff. He was a big believer in free markets.
He was. And he argued that the goal of trade policy shouldn't be to achieve a trade surplus. The real goal should be to get more goods and services for less effort.
Right. It's not about kind of winning or losing. It's about efficiency.
Precisely.
And Hayek, he talked about the dangers of government intervention.
He did. He was all about letting the market do its thing. Self-regulation.
Okay. And Adam Smith, he was the one who said that, if another country can make something cheaper, you should just buy it from them.
Famous quote, the idea of specialization and comparative advantage.
So this is this fundamental debate, right? Protectionism versus free markets.
That's the core of it. And like you said before, which one makes more sense really depends on the context.
The circumstances.
Right. There's no one-size-fits-all answer.
Okay, so last but not least, a Marxist perspective on all this.
Well,
I gather that Marx and Engels were, well, pretty critical of both tariffs and free trade under capitalism.
oh, yeah. They weren't fans of either.
How come?
Well, from their point of view, neither one really benefits the working class.
Interesting. So tariffs, they saw them as a tool for national capitalists.
To compete with foreign capitalists, but ultimately it still serves the interests of the capitalist class.
Right, so the workers don't really gain anything.
Exactly. And free trade, well, they saw that as the freedom of capital to crush the worker.
Wow, that's a strong statement.
It is, but the idea is that, free trade allows companies to exploit labor globally, to constantly search for the lowest wages.
Right, because if they can find someone who will do the job for less, well, they'll move the jobs there.
Exactly. It's a race to the